Good evening and welcome to the ShadowTrader Video Weekly for Sunday, January 27th, 2013. I'm looking at some channel analysis here in the S&P and other majors. That's what I want to start with. And what I'm looking at specifically is obviously we have a market that's kind of on a tear here. It's just seems to be going up, up, up after this consolidation here of pause, and we've just gone kind of straight up. It feels like some sort of a melt up is occurring. So what's on everybody's mind is probably, how far is it going to go, or where's the short point, which I'm thinking myself as well. So I think the best way to look at that is just to look at longer term channels. And so if I pull this down, what I've done here is I've specifically drawn the defining channel here on the SPX using this low here, and specifically using this high, reason being that if I'm starting from this low, I want to go to wherever the next peak was. So I'm not really paying too much attention to this being over. And if I do that, looking at the S&Ps, that actually gives me a target here close to right around 1534, which is where I think we can go. I think the S&P would probably have to pause a little bit before then, but this is the defining channel. So if you think the market can't go further from here, I think actually that it can. I think that longs are at risk here entering new positions. However, we do have to keep in mind, where the bigger picture in terms of the channel could be taking us. If we take a look at the Dow, I've drawn the same exact thing. That's DJI, excuse me. Same exact thing on the Dow. I'm using this low here, taking the markets to here, and then notice that that takes us right up into here, right around the just over the 14,000 level. All right, now Dow is actually pretty close to that, so I'm going to be keeping an eye on this. Remember that the major averages generally are always out of sync. You have them hitting different areas at different times. Case in point being, look at how the NASDAQ Composite is acting here, right? Definitely relatively weaker on the heels of, Apple and some tech stocks not participating as much, and you can clearly see that it's not even at its horizontal resistance point here. So that's something that I'm going to be looking for as well. I'm going to be watching this area in the NASDAQ. I'm going to set an alert here, and when we get up to here, we'll see how this area of the 3200 area ties in with the S&P and the Dow and where they are, close to their thing. As I always say, because of these things are out of sync, what will generally happen is that you'll have a NASDAQ that'll move up to this level and then actually break out, possibly ahead of the S&P hitting the channel or the Dow, and it will bring players in at the wrong time thinking that, oh, now the NASDAQ is broken out, but they're not paying attention to this intermarket analysis of, what is the S&P and what is the Dow doing, and then, so then those hit their resistance and then the whole market pulls back. So we shall see. All right. In keeping with the whole channel theme, I wanted to take a look at Apple, which obviously I get tons of emails on. The stock's just been destroyed this week on a 50 to 60 point gap down on Thursday, and then follow through of that gap down on Friday. So same exact thing. Well, how far is it going to go? Well, for Apple, I've decided to draw the channel this way. I use this high here, which is obvious, touching to here. I didn't go into here because that would have given me a trend line that would have been more like this, cutting through a lot of price action, so I decided to use this. And then when I extrapolated out the channel, I noticed that I had some pretty good touches right here, and again there, and again there, and it went through this shadow, which is okay. So I'm using this as my channel. I'm a big believer that the trend line needs to be drawn where it has the greatest amount of touches, and also wherever you see failure at the trend line makes a lot of sense to me, meaning that, for instance, here one could argue that this action went over the trend line, which it's true, but notice how later on, before the earnings, Apple stopped right at the trend line. So if you can go forward and see that the trend line works very well, it's probably at the right place. And again, that's what I'm using here, using these touches all in this area and disregarding the fact that there's dangling stuff here. So what does that do for Apple is that brings our channel terminus, ending point, whatever you want to call it, right down into here at about the 415 to 417 level, right there. Right, actually it's about 413, 414, right in there. Okay, and that's where I think that Apple is probably going to catch a bid and have some sort of bounce back up, at least in the direction, up into the direction of its, of the midpoint of the channel. If you want to draw a line right into the midpoint like so, we could do so. And you'll notice that it's interesting. It takes us right about to the 460 area, which interestingly enough would be right where the gap fill would have to start. And I don't know if Apple's going to fill the gap, but remember, most stocks do fill their gaps. And that's where the trade could actually get really interesting. I mean, I'm interested in being an aggressive type of buyer, down in here for a longer term hold. And then my first target would be that midline, which ties in right with the top of the gap. So that's actually what I would be thinking is the bounce would happen from about 415 to about this 460, 465 area. Okay? All right. So that is what is going on in Apple. Let's take a look at some commodity charts that I've been looking at as of late. I made a call recently on gold, thinking that gold would be a short, and unfortunately gold didn't get to my short point. You can see here that I actually still have my alert sitting here at the 1698, and here we went as high as 1697.80. So this alert was never triggered. So the reason for the alert there, I'll actually cancel it now. The reason for the alert was so that I could get a short off here at the downtrend line, and notice that we crawled just very close and didn't come in. Then gold did sell off. Gold is actually in a really interesting pattern now on the weekly, which possibly is looking like it could break the ascending trend line. Those of you that are into gold, you have to watch this very carefully because you've already had multiple touches here. Notice that the trend line's been established here, and then I consider this basically a touch. Sometimes you don't come all the way to it. You had a shadow down beneath here, and then you've bounced to a much lower high here. So remember, as eventually one of these lines is going to break. And right now it's feeling like it's the downward line. Obviously, if we get a bounce at the trend line, retest here, and these lines keep tightening, maybe it'll be up, but it's too early to tell. But for now, the signals are more or less pointing to the downside. All right. I've also been talking about short on the Nikkei and long on yen futures, which are still getting the smackdown. Still thinking there could be a bounce play here on the yen futures coming into the 50% retracement on the monthly. That would be here. We'll let this chart give it a second to just bounce back. There we go. So the movement here coming into the 50, I think there'll be kind of a high odds play of a bounce right at the 50%, which could tie in with a short on the Nikkei futures, which would be right up in here. Notice I've already put a limit order for a small lot because that's usually how I like to do it. Is sometimes instead of setting an alert at a prior resistance, I'll put a limit order out for a small lot, and then I have these entries sent to my cell phone, and then no matter what time it is, I know that I've been filled on that, and then I have that small position on, then I can get to the computer and put on the larger position. So that's at the prior resistance here on the Nikkei futures, which I would think would back off at the same time as the yen hits the 50% retracement. So that's something I'm looking at. Also in keeping with the commodities theme, there is possibly a short coming up in platinum futures. I think right up in here, you can notice I've put the line here at the prior resistance point. That's on a monthly. You can see it also on a weekly. Right up in here, there's going to be some resistance. These have kind of been on a tear. Obviously, futures trade for a rollback. Remember, futures are highly leveraged, so you have to be very aware of what is the tick size, what is the notional value, and you do that using the dashboard function here. So you can see here that each tick increment, for instance, in platinum is 10 cents. On a 10 lot, it's worth 50 bucks. On a 1 lot, it's worth $5. So you've got to figure out, obviously, there's 10 of these ticks in each dollar, so you've got to kind of do simple math and figure out what your risk would be, what your contract size would be, etc., if you want to play these. And because futures are so leveraged, it doesn't take a very large move to either result in a good size gain or a good size loss. So be very careful. So remember, the dashboard function is right here, and that is important to note if you're going to be trading futures. All right. Let me see what else I have. Oh, yes, cocoa. Beyond that, the last one I wanted to talk about was cocoa. Cocoa futures look to me like they may be coming into some longer-term support on the weekly, and that would be right in here at the 2057 area where I think there could be a bounce. They actually could come into a range because you see that there is kind of like a range here of support, meaning there is definitely these supports which are strong, and there's one just below here, so I'm going to be watching in this area for a bounce play. in the cocoa futures. So there's something kind of different from the usual, stock and option things that you're used to, if you may be interested in that. All right, beyond that, let's get into the profile a little bit. Here's what I'm looking at for early next week. I wanted to show you in the profile here, and also what I'm going to be watching very closely for in the ES in the coming week. Friday's action and Thursday's action was very interesting to me in that we saw that overnight action and regular trading hours action was having a lot of problems going over the 1497.50 area. This is really, really key, right? So having problems crossing that, and this was here, right? And it happened then again here, and again here, and then we spent a lot of time in this area, built a bunch of value, and what happened was, interestingly enough, on Friday afternoon, we had a look above and a very sharp failure. So I know now into next week that this area is a really important, what's called a go, no-go level. That's a Daltonism. I always call those Daltonisms. If it's anything that James Dalton says, I give him credit. Things like, traders do what works until it doesn't. That's a Daltonism. Go, no-go level. It's a Daltonism. So I throw those out there. So anyway, go, no-go level just basically means it's an area you need to watch very, very closely that is either going to create, a good trade to the upside, or it's an area where the market keeps failing and then there's going to be a trade to a downside, right? It's that proverbial line in the sand that's really important. So early in the week, the focus, I believe, has to be on the 1497.50. We did have what's called a look above and fail. That's kind of bearish. So now you have larger traders of the more intermediate time frame having more confidence to put on a bigger short, correct? Because, why? Because they have a defined stop. So they know that they can put on a larger short. So for instance, an early trade on Monday, if the market moves back up here and again starts to struggle and can't make it to the 1497.50, I would say that is an area for a short, which would cause at least a liquidation break. Remember, a liquidation break is nothing more than a playable down move, which may not be a long-term move, but it's at least a playable type of down move where the weaker hands get liquidated out. That's called liquidation break, where essentially the last longs, bag holders, sometimes they call them, dump their position. Okay, so that's what I'm going to be watching for in the coming week. All right, as a reminder, just remember, if you want more detail on the profile, God, that's a good-looking dude there. I wouldn't want to mess with him in a bar. If you want more detail on the profile, remember, go to my blog each morning. I post a picture here. You can see I've already started writing up the comments for January 28th. I'm not going to go through all this, but this comes out every morning around 8:30 to 9 a.m. Eastern, and there's always a snapshot of what's going on in the profile here, and you can read my comments there. All right. As a reminder, I am subbing for Brad one more day. That would be tomorrow, Monday, on the ShadowTrader Squawk Box all day long. We had great days on Thursdays and Friday with all the ShadowTrader listeners. I'm back there again on Monday. Then Brad will be back on Tuesday. So join me there. That's under the support chat tab on the Thinkorswim platform. All right. On behalf of myself and the entire ShadowTrader team here in beautiful, wintry, cold, snowy, frigid Philadelphia, Pennsylvania, I wish you good trading and good night.